In this video, we will go over the homework problems Zelman 2-5 and Zelman 2-7. These are review questions. And so the first one, Zelman 2-5, the following questions relate to the statement of operations for not-for-profit healthcare entities. A, what are the major reductions of revenue taken to get from gross to net patient service revenue? So remember when we go to a doctor's office and they bill our insurance, we debit accounts receivable and we credit patient service revenue. And so we know at the end of the day, right, if we bill Blue Cross $1,000, they're not going to pay $1,000. They're going to pay, let's say, $700. We also know if we have a self-pay patient and they have a deductible or they're self-pay and they're going to owe $5,000, that we may not get $5,000 from them. They may not have any money, and so we have to take that into account. So the first example with Blue Cross, we need to adjust for contractual allowances. So here we start with our gross patient service revenue, and we subtract less contractual adjustments. And then we also have to subtract out for bad debt expense, or formally we call that provision for bad debt. And what we're left with is net patient service revenue. Okay, so we abbreviate that as NPSR. You may hear in your workplace, if you're listening to a finance talk or something, they may talk about NPSR, and so that is what NPSR is. B of that problem is, what are the major components of expenses? So if you think about a healthcare organization, what would be the major expenses? So from our book on page 59, they talk about what those are, and starting on page 59 and on page 60. So our major expense in any healthcare institution is generally salaries and wages and benefits, right? So our cost of labor tends to be really expensive. Could be supplies, it could be pharmacy, could be rent, occupancy, depending on the organization, and could be depreciation if they have a lot of depreciable assets. But I would say the major expense of any healthcare organization is labor. Next, we want to look at performance indicators. So this is from page 63 in your book. And really, when we're looking at performance indicators, we're looking at our revenue over expenses and how that may be adjusted based on various things. And we won't get too much into that. We'll get into that later when we do financial statement analysis. But I think the next important one is, how do we get assets released from restriction, or how do we get net assets released from restriction? So remember, in a not-for-profit entity, our equity section is called net assets. And we have three types. We have unrestricted, we have temporarily restricted, and we have restricted. So unrestricted is simply equal to our retained earnings, which we had in a for-profit entity. So unrestricted would be our revenue over expenses each year building is our unrestricted net assets. Temporary restricted net assets is when someone donates money for a specific purpose and we can't use that money, or we don't take that money into income until that purpose is put into place. So this may be that someone gives an entity $1 million to buy a building. So that entity has the $1 million, but they can't release it from restrictions until they buy that building for $1 million. And then permanently restricted net assets is what we refer to as an endowment. So I give $1 million to Boston Children's Hospital and I say this is for an endowment fund and you can never touch the $1 million, but you can spend the earnings on that. And so that's what restricted net assets are. So the question specifically says, how do we get them released from restriction? So we really only release temporary restricted net assets. Restricted net assets may adjust based on earnings and spending of those earnings. And if you wanted to refer to the book, that would be found on page 67. Let's now switch to problem 2.7, cash flow statements. We talked about this in class, and I want to review this. Cash flow statements have 3 main sections, right? And those sections are, and you should know this, they're cash flows from operating activities, cash flows from financing activities, and cash flows from investing activities. And you can watch the second video I posted to refresh yourself a little bit more on that if you don't recall. But you should also know what is the purpose of the cash flow statement. And so the purpose really is to tell the reader how much cash came into the entity, how much went out, and it tells us how the cash was generated and how it was used. So again, the purpose really to talk about how cash is used. And so here you can see the way that cash is used here. And let me just make that a little bit bigger. So the purpose of the cash flow is to tell the reader how much cash came into the entity, how much went out, and really it tells us how much cash was used. And so that's what you need to know about cash flow statements.